Hey guys, welcome back to my new series on order flow. In this video, I'm going to cover the basics of a footprint chart like this. And from this, you'll begin to learn how to interpret the actual orders flowing into the market. They can look like this, or they can look like this. There's a few different ways you can construct a footprint chart, depending on who your vendor is and what's best for your trading style. I use a couple of different ones for various different setups. And once you understand them in context, you'll be able to read the market just like this. And shoves us down below our trade location here. And then we get this big reversal candle here at a double bottom. This is your key candle right here. This is where you want to pay attention. All of that selling that went on here was absorbed on the way back up off this double bottom. We wicked through by 3 ticks, and then you can see this initiation take place. Price just kind of takes off and rotates us back up. That was me just a few days ago assessing price at a trade location on the S&P 500 futures contract. Let's break this down so you can do it too. But before we jump in, if you missed my prior series on volume profiling, you can get started by subscribing in the video description below. When you do, you'll learn a powerful technique to IDing high quality, data-driven price levels to maximize your trading. Okay, so let's get into it here. What is it that we're actually looking at when we look at an order flow candle such as this? So let's just focus in on this one right here. Let's focus in on this breakdown right here and kind of walk and talk through what it is that we're actually talking about. Okay, so right now, on your standard order flow candle, you've got your basic elements of a candle, right? You still have your open, you've got your high, you've got your low, and you've got your close. So in this instance, we opened at 52.84.50. We traveled all the way up to 52.85 1/4, and then we dropped all the way down to 52.78, and then we closed at 52.80.50. So if you do the math on that, 52.84 1/4, 52.80, so about 4-point move here on this one, 3.5-point move is where this thing closed down. It's a pretty big candle, pretty violent candle in context of the day. But there's a few other pieces on here that you want to look at as well. So you've got all these numbers baked in here. So what are those numbers? Those numbers are executed contracts that are either aggressively selling or aggressively buying. Okay, so order flow adds in another layer of information. That's very valuable information when you put it into context and you assess it at some levels. Okay, so we are looking at the aggressive sell side here, or the bid, right? This is where you find your aggressive sellers, and then you have your aggressive buyers on this side right here. So in this particular candle, you've got this negative 811 at the top here. That's your delta. That's your sum total of the candle. And this gives you the magnitude of that candle. Okay, so not only did this thing travel 3.5 points or drop 3.5 points, but it also had a negative delta of 811. And that 811 means that there's 811 more aggressively sold contracts in this 5-minute period than there were buyers. So now that you've seen it on a chart, let's dive a little deeper into the anatomy of a footprint candle. Okay, so you saw a sell-off candle. So now let's look at the reverse, a bullish candle. All right, we're going to go through a little bit of terminology here. We're going to go through bid, offer, and COT here first. Okay, so your bid side, this is where your aggressively sold contracts are on your left-hand side of the candle. Okay, on your right-hand side of the candle, you have your aggressively bought contracts on the offer. Okay, so just keep that in mind as you're assessing candle to candle. This is your sell side, this is your buy side. All right, the COT is right here on this candle. This is called the commitment of trader. This is where the most volume in this candle has gone off. Okay, this is like your high volume node in terms of volume profiling. Okay, so you're going to want to pay attention to these as rallies come to an end, or as rallies are progressing, or sell-offs are progressing, so on and so forth, where the position of this is. So being at the bottom of this candle, of this bullish candle, this shows some initiation. This shows that the move is kind of just getting started. That's what this means. As the moves progress, the COT moves to the middle, and as moves end, the COT comes up to the top. Okay, so very important you pay attention to where the positioning is of the COT. All right, your delta we've covered. Delta is the sum total of this candle. To me, this is the most important piece as I'm assessing candle to candle and the context of the marketplace. Okay, so in this candle, the way you read this is that 2,184 more aggressive buyers have gone off in this 5-minute period than sellers. Okay, that's very bullish. All right, so very, very important to pay attention to your delta, candle to candle. Delta doji, I'm going to skip over that for just 1 second. We'll come back to it. But let's dive into a little bit more of these buying and sell sides, okay? So buy side imbalance, you see them here. There's 5 of them in this candle. So you got 1, 2, 3, 4, 5. All right, so let's take a look at what that means. So 420 aggressive buyers went off against 135 sellers. Okay, so that's more than 3 times as many buyers as sellers. So that gets highlighted. That's how this software is calculated. Okay, so 231 versus 13, and then you have what's up here called a buy stack. All right, so you have 107 aggressive buyers going off against 0 sellers. All right, 168 versus 1, 325 versus 56. You get the idea. Okay, what this represents, these are what you need to pay attention to in fast-moving markets, right? So when you see this, this means that somebody has dropped in a rather large order, and means that price slipped through this price point pretty quickly. All right, it didn't take too much time right through here. So you see these very, very small sell side. There wasn't enough time for sellers to get in there. Buyers blew right through it. Okay, so you're gonna want to pay attention to those buy stacks. All right, sell side imbalances in this bullish candle, there were 0 selling imbalances in this candle, which is very bullish again. All right, exhaustion is nothing more than just an alert. When you have 5 or more imbalances in a single candle, you'll get an exhaustion alert. And all that really means is that there's the potential for buyers to be overbought in this instance, or the reverse, sellers to be oversold. All right, so it's just kind of an alert to pay attention to, that you may be getting a little overheated because price is moving rather quickly with 5 imbalances ripping through this 5-minute period. Okay, buy and sell stack, we covered that. Sequential decline, it's not really something that I really pay attention to in fast-moving markets. Essentially what it means in this buy candle, the only thing that would trigger is this 595, 343, and 82. So you have buyers declining sequentially on the way up. At the tops of candles is where it's going to really matter in slow-moving markets. In fast-moving, I don't really use it that much. It is a feature, but I don't really pay much attention to it. So let's go back to Delta Doji. Delta Doji is an anomaly in the marketplace. So as markets are rallying and they're starting to come to an end, right? And you see this kind of a candle pop up towards the top of a rally, this is an anomaly that is indicating that there's probably going to be a reversal, or there's a high probability for a reversal. Does it mean sell now? No, it does not. It means that be on the lookout for a potential reversal incoming, all right, in the next 2 to 3 candles or so, give or take. But it has to be at a trade location. You got to qualify it, so on and so forth. But this is an indicator that there's an anomaly. It means there are 381 more buyers in this candle with heavy rejection at the top, COTs outside of the body, and it's a red candle. So how can you have more buyers than sellers? Well, it's an anomaly. It happens, but it's pretty rare, and it happens usually at swing lows and swing highs when you see these types of things, okay? So that kind of covers the basic anatomy that you're going to see on a footprint chart. Okay, so now you have the basic pieces of the footprint chart. So what's the next steps, you may ask? Qualifying your trade locations and assessing the highest quality entries. This is not as easy as it sounds, but I break that all down in the next video. We'll see you there.